good afternoon. You're watching Closing Trades on ET now. I'm Anisha Jain. With me is Aisha Faridi. Well, we started off slow, but since then we have definitely picked on pace. 17,700 has been scaled, and the bulk of that move has actually been led by the banking names because Bank Nifty is up a good 500 points, and even the broader markets are actually doing well. You have the advance decline ratio, which is favoring the advances. It's the FMCG which is also doing quite well. In fact, Nifty FMCG index hit an all-time high level on an intraday basis. Tata Consumers and Nestle both will come out with its earnings tomorrow. The expectations are quite decent, and that's the reason we are seeing a bit of a green reaction there. And talking about earnings reaction, ICICI Bank deserves mention. Bank of Maharashtra, where the commentary is there for you on the screen as well as Yes Bank, where there was a bit of a disappointment when it comes to their asset quality. But as far as asset quality of IndusInd Bank is concerned, no problems there at all. The net NPA ratio or the NNPA has improved. Even the GNPA is looking better. The provisioning is coming lower than expectation. The only reason the stock is off the highest point of the trading session, and I'm talking about IndusInd Bank, the reason is that the NII is slightly lower than Wall Street was expecting. The NII came in at 4,669 crore for IndusInd Bank. The street was expecting the number to be closer to 4,750 crore, and that will tell you the intraday reaction. The first number was quite positive as far as the asset quality and profit line is concerned, but NII is a smidge below expectation. And also, I guess the entire banking space was doing quite well since the start of the trading session, Aisha.
Yes, it was a big high flyer coming in from both ICICI Bank. HDFC Bank, although wasn't quite expected on the expected lines. One was expecting a bit of a positive reaction there. But having said that, HDFC Bank has been a good performer. But even HDFC Bank is actually seeing a pickup after what looked like a muted start along with HDFC. PNB, IDFC First, City Union Bank, BOB, RBL, they're all seeing a very, very positive move. SBI alone is up 2%. You've got a 2.5% uptick coming in for Can Bank as well. And now ICICI Bank is at the high point of the day. That's soaring high by nearly 2% as we speak. The only laggards, so to speak, are IndusInd, like Anisha just highlighted. And we'll give that stock a little bit time to digest earnings and find its direction. And Kotak Bank, for that matter, that's a little bit muted in trade. But 2% higher for ICICI Bank, and SBI clearly doing all the heavy lifting. HDFC Life as well has seen a big move, 6.25% higher. The Tata Consumer, Axis Bank, Wipro after that buyback announcement has shot up now 2.25% in trade. So things are looking pretty okay. But let's take it across to our experts, Rahul Shah, Kunal Bothra, Naresh Mirani, and find out whether they're liking the market construct or not. Kunal, heavy lifting being done by the banks today, and we are back above the 17,700 print. How's it looking?
Absolutely, Aisha. So it's just about banks today, both private sector banks as well as the PSU names, which are looking extremely strong today. Momentum has come back into the banking stock. So, over the last 3 or 4 days, we were looking out for the banking index as being a bit of an, in a consolidative mode, not major trends emerging from the banking stocks. But then today, both from the private sector as well as from the PSU banking names, there are strong candidates which have given breakouts. ICICI Bank specifically post results, I think, is done quite strong for itself, come back about the 900 level. SBI is leading the charge for the PSU banking stocks. You have the mid-cap end of the banking names like of City Union Bank, Union Bank, etc., which are also looking very strong and charged up. So that's generally an indication that we may see a further leg of up move for the banking stocks as well as for the Bank Nifty overall. So the bias remains positive, and 17,500, which we flagged off earlier, remains to be a strong support. Even on a day like today, when the indices open with a bit of a flattish kind of a drift on the Nifty, those are days as well as those are levels where traders should actually go for a contra buy.
Okay, contra buy is something that the traders could indulge in, but take a look at some of these railway stocks as well. Rail Vikas Nigam is sitting with a gain of 11%. You also have Indian Railway Finance Corporation, which is up a good 5%. And then a lot of names from the PSU banking space like Punjab Sind Bank and even SBI for that matter are up in the trading session. But let's address some of the stocks and news before we go to Naresh and Rahul as well. We have HDFC Life, of course, wherein we have been talking about how the RBI has allowed HDFC Bank to own over 50% stake, so that supply pressure goes away, at least the overhang with respect to that. In terms of earnings reaction, Yes Bank is a bit tepid given the fact asset quality is lower than what Street was expecting. And even the management says that the 1% return on asset target that they had for FY24 looks a bit more difficult. Now the target has been shifted to FY FY25. So 3% cut there. IndusInd Bank we highlighted already with respect to earnings, and then of course earnings tomorrow is expected with respect to Tata Consumers, and today later we'll get Persistent Systems. That too is holding up with a gain of 3% ahead of earnings. The margins are expected to remain flat, but it's a dollar revenue which is expected to jump up by 4%, and the new business deals are expected around $200 to $250 million. And for Tata Consumers tomorrow, the revenue is expected to jump by a good 10 to 11%, led by the India food business, and the pricing-led growth is something that should augur well for the company as well. Nuresh, let me come to you and ask you about some of these FMCG plays. Tata Consumer ahead of the earnings, Nestle as well as ITC, which is sitting close to the 52-week high and life high levels. Any name that you would want to recommend from the FMCG pack?
So it's a tough one to call the trends here. Tata Consumer drifted from 820 down to 690. Today it is making a comeback. Say the recent swing highs around 730 watt levels. If it can sustain above that, that would be a confirmation of a small trend change. That would be a trade wherein it could go to 780. So Tata Consumer looks okay. Nestle has a bunch of resistances around 21,000 levels. So would wait out. It's already moved up quickly in the last 1 month or so. The only name which still looks promising in the FMCG space is Godrej Consumer, which has shown a slow and steady move after the breakout above 950 level. So on dips, Godrej Consumer would be the top pick.
Right. Okay. Rahul, can't help but talk about what you're making of the moves on banking. First, that go ahead and the big overhang on HDFC Bank merger happening, ICICI Bank's earnings, and of course, the market just about absorbing IndusInd's numbers.
Hi, good afternoon. I think, yes, as you mentioned very rightly, I think we saw on Friday the merger coming off HDFC Bank and few exemptions which they had sought for it and they got it. And I think there could be some upside, immediate upside in the stock. And we've seen HDFC Bank resulting into a positive move. And I feel still post numbers, I think numbers are quite in line with what Street was estimating and what we were estimating. So I feel that the most awaited merger should be done now in some time. So I think risk versus rewards in the entire banking universe, if I look at it, I think HDFC augurs well. Obviously, strong blockbuster numbers from ICICI Bank, and I think this is just the beginning of, I think, the wholesale plus a private sector bank. What we saw, I think, we should see the same kind of numbers in SBI also, and so on and so on. So I think ICICI has strong numbers, and I think we've seen in the reflection in the prices today, and I think going forward, we could see more in all the fronts. I think we saw the numbers pretty strong. State Bank, yes, I think if you look at it, I think this stock has underperformed big way vis-a-vis all other banks, if you talk about our wholesale banks. And after a long time of underperformance, we saw PSU banks performing in last 3-4 months. And again, but we've seen the lackluster in SBI correcting, I think 15% from the near-term high. And I think we've seen just gathered some momentum in last couple of sessions. So I think a lot of room for SBI to catch up, obviously. So I feel that SBI remains a top pick, ICICI, HDFC, all three of them looks quite interesting. And I think we've been discussing quite a number of times that I think financials is the buzz, and I think financials has been performing, be the credit growth, which we are seeing the numbers, and the performance which we've seen in most of the banks coming up. So I think pretty decent performance. So I feel that I think there should be some re-rating in all the banks, and I think again we should see some of the fireworks in most of the banks which I've spoken about.
Okay, so that was about some of the banks which have been doing well, but real estate is another pack which has been quite excited of late, and we were speaking with the management of Prestige as well. They sounded fairly optimistic about their doubling the pre-sales target as well in the next 2 to 3 years. And of course, it's luxury space which is seeing the maximum amount of traction, but now even affordable segment is expected to do quite okay, given the fact there was a pause button that was hit by the RBI. Let's go across to the bite of management of Prestige as to what they told us, and then Rahul will discuss the space further.
Today in Prestige, whichever city you go to, our luxury product is fully sold out. Now we are generating that product in every city, Mumbai, Hyderabad, Bangalore. Again, we are trying hard to see that we get the right product, to see that we don't have a gap in that space. But the volume game definitely comes from the mid segment, and we will continue to build that mid-segment. Warehousing, we've already done. We have lands which are tied up for warehousing. Warehousing will not give me any top-line revenue. It's again a capex-driven market. We have done one product in warehousing, and we hope and wish to continue that. It's work in progress. So there is scope in warehousing. We've done this in Bangalore and we'll continue it in Bangalore. Once it succeeds well and we stabilize there, maybe we'll take it across to several other cities which we are present in.
Rahul, which is your favorite stock among the real estate stocks?
I think the sector, looks very promising. And I think after the quarterly updates, what they have given, I think all of them have given fantastic updates. And if you look at a couple of them have their all-time best numbers in quarterly sales updates. So if I have to talk about it, I think Macrotech came with a superb numbers on Saturday. So I think that remains one of the preferred bets in that space. Godrej also, and I think after the recent good correction of 50% and plus, and that I think looks very interesting. And I think if you look at the current quarter updates of the company, managing has shown a very strong. So I think, and plus thirdly, I think Prestige. All these three remains our preferred bets. And if you look at one simple thing about it, in spite of the rising interest rates scenario also, and we've seen this kind of numbers. And now post the RBI's pause after this policy, I think still more fireworks to come. That's what looks like. So I feel that I think all three real estate stocks which I mentioned looks quite interesting from here.
Okay, Rahul, stay with us. Lots more to talk about. That's the take coming in on Realty. We're going to take a very quick break with news that it's banks which are holding out well, and so are markets. We are well above the 17,700 mark on the Nifty futures at a time when Europe, mind you, has started off a little bit on the back foot and in the red, and similar was the picture all across Asia as well. Back with closing trades right here in 80 now. Innocent Bank. Let's try and understand the nitty-gritties of those numbers and why the markets reacted the way they did. Harsh joins in with the review.
Well, yes, the net interest income for Innocent Bank has come in at 4,670 odd crore. That's a 17% jump, 4% jump sequentially, 17% year-on-year basis, and slightly below what most analysts on the street were expecting. We were expecting a number of around 4,750 crore. So marginally lower is how I would call that particular number. Operating profit also largely slightly lower on the back of that lower than expected rise in NII. So operating profit growing 11% year-on-year. As per our poll, we were indicated that the operating profit will come around 3,850 crore. It's come in at 3,757 crore. But also provisioning has been better than anticipated. So provisioning coming lower than expected. 1,030 crore is where the provisioning number came in at versus the 1,100 crore number which most analysts were expecting it to come at. So that has aided profit after tax. Profit after tax largely in line with expectations. 2,000 crore is where we were expecting PAT to come in at. It's come in at, in fact, 2,040 crore. There's been a 20% jump when it comes to the OPEX as well. So keep an eye out on that particular number. Most companies reporting a solid rise in OPEX. We're also seeing GNPAs improve 8 bips quarter on quarter. It's coming at 1.98%. So asset quality improving. NNPAs too improving 3 bips marginally quarter on quarter. And we're seeing an improvement in NNPAs as well. In terms of the growth on both sides of the balance sheet has already been quite healthy. We've already seen those numbers, but let me take you through them. 20% growth in advances and a solid 15% growth on the deposit front as well. So we're seeing good numbers across the board. In fact, advances grew 7% quarter on quarter, while the deposit number growing still lower than advances, 3% sequential rise in deposits.
Thank you, Harsh, for joining us. And of course, the management will be there on air at 3:30 p.m. So you can watch out for more details. And our team will also quiz the management as to what the details of the earnings are. But separately, Rahul, also wanted to get your take regarding some of these railway capex companies. We have talked a lot about it, but then all of these stocks went into a phase of correction as well. Now, is it a fresh buy for these railway, Vikas Nigam, etc.?
I think if you look at it, I think usually all these stocks just fizzle it around post-budget rallies and all. But this time, I think the things are different, and we've been seeing from the center the kind of orders coming up and for the railways. So I feel that this momentum will continue, and there were most of the stocks like railway gas were very undervalued for quite some time. And then again, we've seen the momentum coming back into the stock. So I feel that this sector should remain under, should show a good strength. And obviously, railway gas is which has been performing. Or maybe in that matter, Titagar Wagon, we saw some kind of momentum building up last week and all. So I think this sector will continue to do well with a lot of noise coming from the center and the orders coming from that. So I feel that this should remain positive for some time.
So that was about the railway capex theme. Yes, usually the post-budget, trend works out, but given the fact next year is perhaps election year, we are seeing a bit of a momentum build up for a lot of these infrastructure counters as well. Kunal, a couple of these other counters are sitting at 52-week highs. Bajaj Auto comes out with earnings tomorrow, up around 0.5%, and JBM Auto has been on an uptrend as well.
Yeah, Bajaj Auto, Hero MotoCorp, these stocks are making a comeback for themselves. In fact, Bajaj Auto has been actually a much better performer as compared to the other peers from the two-wheeler pack. JBM Auto, I would still believe that it's somewhere, entering into a deep overbought territory. So, even though the momentum is very strong, thick and fast, but then I think at current levels, initiating a buy would be a very skewed kind of a risk reward, because on the downside, the stock has its 200 DMA, which is I think at sub 500 odd levels, and the stock is at 800 plus mark, which means a divergence of more than 300 rupees for the stock price and higher than that. So I think that's one of the reasons why would not like to participate on JBM Auto. But I think Bajaj Auto is something which looks attractive. 4,400 has been the the near-term targets which I highlighted a few weeks back. Would still maintain those targets for the stock. Hero MotoCorp is a fresh addition to that list of the auto pack breakout, coming back about the 200-day, rather the 50-day moving average, as well as an inverted head and shoulder pattern. So that's also looking very attractive. Tata Motors, somewhere the stock, even though has gone a bit more sideways, but I would still believe that the trend is extremely strong for the stock on the upside. So maybe after a few days of consolidation, once the stock breaks out, it could be ready for coming back about that 500 plus mark as well.
Okay, so from 52-week high levels, let's talk about the stocks which are at 52-week low, PVR and Nykaa. Nuresh, would you be a buyer?
Not really. We've not seen any reasons to do that. So if you look at PVR, the major support is around that 1300, 1350 mark. That's the price point you want to go bottom fishing. That was the low in 2021. So that's a price point I would wait for if one has to buy. Nykaa, on the other hand, absolutely no recovery. And unlike the rest of the new age names, they've gone through sideways. But out here, it's been making new lows every few weeks. We are back to the, it made a bottom around this 120 mark in January. We are back to the same prices, a fresh breakdown out here. So no reasons to buy here. It has still a long time to go before we call a bottom, or rather a consolidation also.
Okay, let's go across to Vinny. She's standing by to talk to us about Tata Consumers. The stock is definitely excited ahead of its earnings. Vinny, what exactly is the stock pricing in with respect to expectations?
So in terms of Tata Consumers numbers, now we're expecting a revenue growth of around 10 to 11% coming in from the company, while profits are expected to see a better growth of around 18%. Margins, slight bit of a contraction there. 13.6% is what we're expecting the EBITDA margins as versus 13.9%. So slight bit pressure still of that inflationary trends is continuing on the margins. 30 basis point contraction for the EBITDA margins of the company. Let's just get a breakdown of the numbers. Now, double-digit revenue growth mainly will be aided by the India food business, which is expected to see a more than 20% growth is what we are understanding, while India food business will be mainly a pricing-led growth. So obviously, because prices in salt had seen an increase, so that double-digit growth will be mainly a pricing-led growth in the India food business, which is overall leading the growth for Tata Consumers' total revenue growth. Now, we are expecting Nourishco also to continue to see a strong growth coming in. Gradual recovery is what we're expecting in the India tea business as well. Growth is expected at around 1 to 2%. That was a bit under pressure in the last couple of quarters. So yes, an improvement in the tea business for the company. And international business, we're expecting a bit of a muted growth there because of the inflationary environment. Factors to watch out for: what is the top line growth in the India food business, overall business in terms of margins, market share trends in tea, as well as any commentary coming in on raw material prices is what we're watching out for.
You know, the one sector which is seeing a little bit of buoyancy today is actually IT. Wipro, of course, after that buyback announcement, even though the quantum of the buyback has only been reducing in the last 3 years, the market is anticipating about 9,500 crore rupees on buyback. Persistent as well is a gainer today. That stock holding up 3%. Birla Soft up 3%. OFSS as well higher by about 3.25% as we speak right now. So yes, IT definitely is seeing some buying. Let's check in on the other names as well. LTIM, Coforge, LTTS. Of course, you know, nowhere are they getting undone with the damage that they've seen in the last 2 weeks. There's still meager moves, I would say. But yes, a smidge in the green for sure. Rahul, a buy on IT yet?
I think since last couple of months, I think I've been very convinced that I think in the short term, I think we could see some kind of a pain. And I think that's what we have seen in the most of the stocks from the large IT names where post their numbers, I think they've corrected. And some sort of, I think what we feel is that I think they're settling down at a lower levels now. So I feel that I think if you have a view for a medium term to a long term, I think, yes, definitely a buyer in IT stocks. I feel that the valuations are very compelling, be it a large cap, large IT name like TCS, Infosys, HCL Tech. All of them looks quite interesting from here. The valuations are pretty strong. And most importantly, if we look at it, I think in near term, maybe if you're looking for a quarter or so, that could be a challenging for them. But if you have a longer term horizon, then I think, yes, we should look at it. And some of the mid-cap IT names, also we've seen, the stock hitting 52-week high as well, like names like Cyient and all these things. Those stocks have hit a 52-week high as well. So I think even one needs to invest a patience in this market, this kind of a sector, which it is. So I feel that I'm definitely a buyer in IT stocks at this point.
Okay. Definitely a buyer when it comes to the IT stocks. But you know what? Let's take the closing strategies from our technical experts as well. Naresh, you go first. What are the closing trades you're executing?
So looking at IDFC First Bank, the stock has given a short-term breakout, and IDFC Limited has also done the same. So expecting the trend to come in IDFC First Bank, a move towards the recent highs of 65 is possible.
About you, Kunal, what's the closing trade that you're spotting for us?
So in the morning, we discussed SBI would maintain that same stance on the stock. It's crossed about that 550 mark. Looks extremely attractive now for a potential target of 580. So that's a stock which I'd look to buy as well as recommend to clients.
Okay, actually we were speaking with Sanjeev Bhasin also earlier. He's quite bullish about what's happening with the HDFC Life. He believes that the level of around 750 is quite possible as far as HDFC Life is concerned. For ICICI Bank too, he believes that there could be a 4-digit mark which is visible on the counter over the next 2 weeks itself. Let's do one thing. Let's listen into the bite coming in from Sanjeev Bhasin.
Who thought DLF and Godrej were beaten down to pulp? They'll be up 40% in a month. If you recollect, closer to January, we had given those as two of our topics. Now coming to numbers, ICICI numbers are superb. I mean, look at the gross formation, look at the lending, look at the cost of money, look at the NIMs. I think ICICI is going to 5 figures in the next maybe 2 weeks. There's no question about that. There are no two ways that India is going to outperform. And I'm very, very optimistic. By May, we should be closer to 18,500 on the index, and more than that, stock specific outperformance will continue.
Okay, so that's the word coming in from Sanjeev Bhasin. On that note, we'll let Rahul go. Thank you so much for joining us, Rahul, with the quick fundamental take on a lot of sectors. But slipping into a very short break with the news that the market is holding up comfortably, 17,727 at the highest point of trading session.
Back with closing trades right here in ET now, and the closing trades are pretty comfortable in a spot, holding up above that 17,700 mark, led higher, of course, by banks, and today technology as well is rebounding. But pharma, that's been the space which was a buzz all of last week, and you've got Mankind Pharma, which the IPO opens come tomorrow. So let me take it across to Srishti, getting more details on the same.
Well, yes, absolutely. Mankind Pharma IPO opens tomorrow on 25th of April.
April, and that will be open till 27th of April. And this particular IPO, if we talk about the size of the IPO, this is coming to be at 4,300 crores. And when it gets listed, this company will become the 8th largest in terms of the market cap in the pharma sector overall, with having a market cap over 43,200 crores is what we are given to understand. The price band is also between 1,028 rupees to 1,080 rupees. And if we talk about the valuations of this particular company, a decently valued IPO is what the analysts are looking at. Like after 1 year, the company is expected to be trading at 29 multiples, which is actually not bad in comparison to the other large cap pharma names. We're talking about the company. This is a domestically driven business. What they are into, 97% of their contribution comes from the domestic market. Other than that, they have quite a leadership position, not just in the pharma space, but they have also presence in the consumer space as well. And I'm sure that a lot of our viewers have already listened or known about their brands, what Mankind Pharma holds. Talking about the growth driver, what the company expects going ahead, because they are present in the chronic segment as well, which are those diseases which are not that severe but persist for a longer time, which drives around 33% of their overall revenue. So growing ahead, the company has a focus to expand this particular revenue contribution from this segment and make it even better in the chronic segment. They are growing faster than industry, what the company has indicated, and they've started with a bottom-up approach and expanding their business in the smaller towns. So Mankind Pharma is a domestically driven business present in the smaller town, and the valuations don't look quite expensive as of now, is what the analysts are expecting. So all eyes on Mankind Pharma.
Eyes on Mankind Pharma, but let's go across to Gurmeet Chadda as well to understand what he's making of this IPO. Gurmeet, a large IPO coming after a long while. Would you recommend a subscribe?
So they've been our clients when I was in Citibank. So I've known them for more than a decade. It's a Delhi-based company. It's more like a FMCG company within pharma, because 97-98% is branded generics domestic sales. So the US dependence is hardly there. Also, they've been building their presence in consumer healthcare, as your colleague was pointing out. Their presence across chronic segments, which is anti-diabetic, cardiovascular, anti-infectives, etc. And in the IPM market, they have been outgrowing the industry. If you see last 3 years, there's almost been 1.3 times. So it's already the 4th largest by value and 3rd largest by volume. What is impressive in this company, since I've been knowing them for a long time, is the growth on the distribution side, which is often not discussed when we discuss, pharma. That's why I gave that FMCG analogy. So they've almost like 4 lakh doctors in terms of who prescribe Mankind drugs. They have like 12,000 MRs, more than 3,500 more field managers. So very, very good distribution reach. They're priced pretty well. And as I think the valuations are fair at roughly about 28, 29 times forward. So it could be a good steady portfolio for long term. I would not have much view in terms of how the listing would be and how, and that's not something we are into, as we are on the long term side as portfolio managers. And with a disclaimer that I've been knowing them and they have been our clients for a long time.
Okay, so that's the word coming in as far as Mankind Pharma is concerned. A bit of a quasi-play coming in on FMCG as well, given the kind of portfolio that they have at this point of time. In fact, continuing with that pharma discussion, Kunal, what are the names that you would recommend from the pharma sector?
Well, go with DV Slab as one of the fresh recommendations of a breakout. Dr. D, which has done reasonably well over the last 2 months, broken past about 4,500 and then 4,900. I think the last stock had come back towards was just closer to that 4,900, 5,000 odd mark for Dr. Reddy. The other two stocks which have been very slow, gradual but strong performers have actually been Zydus Life as well as Glenmark Pharma. I think both these stocks have done remarkably well in the last, 1 year to 6 months respectively for these stocks. Zydus Life crossing about that 500 levels, Glenmark Pharma initially breaking past about the 400 mark, and then slowly and steadily getting more traction about those levels. So many of these stocks have given strong breakouts. Some of them are already at a multi-month high. I think that's where I would probably want to concentrate on.
Gurmeet, hi, afternoon. Where is it that you're finding opportunities in this market to buy right now, and where is it that you think there is value on the table, to be honest?
So I think banks continue to show strength both in terms of numbers. We saw ICICI with very good set of numbers. I think it should further get related in my view for a bank to clock 2.2, 2.3% ROA consistently with great asset quality metrics, with very impressive growth both on NIMs as well as on the liability side, as well as shaping the book from coming from 60% exposure to corporate loan side 5 years back now to almost 2/3 book being retail. I think it's a remarkable turnaround. And I think if you see the yields, for example, they are able to reprice loans better, and that happens when you have more floating rate loans, very granular retail book. So if you see the disclosures, their yields on loans went up 60 basis points, and on deposits only went up 35 basis points. They have like a very good CASA book of almost 44%. And I've been making this point that the liability side helps you differentiate, when in rising interest rate scenario. So continues to do well, and so that remains our top pick in banks. We are also tracking some of the others, including HDFC, SBI, some of the mid-sized ones like IDFC First, and a couple of NBFCs. I also think that at some time probably NBFCs, the better run ones where the cost of funds are lower and have stood out, test would do better, especially like Chola, very very good. Murugappa has been a great group, very good track record. Something like something which is more new age like Poonawalla, which is developing a good digital platform. So these are the spaces we are tracking in financials. And I also think that housing, the way real estate is doing well, we're seeing good consolidation towards branded premium developers and some of the building material things. I think this cycle is much longer, and the proof of it is that despite rates going up, I think the entire sector still continues to do very well.
So those are the couple of spaces where Gurmeet is seeing value, real estate as well as the banking names, especially the large cap banks. But what about autos? Because tomorrow we'll get the first of the earnings from the auto pack. Bajaj Auto will come out with its earnings. Shrishti, we broadly know the volume data already, but with respect to profitability and margins, what should one expect?
Well, yes, absolutely. Two-wheeler major Bajaj Auto slated to report its numbers. When it comes to the volume front, the exports have been the biggest drag to their numbers this time around, 21.5% decline on a sequential basis. And that's exactly what the numbers will get impacted from, because this time around on a sequential basis, we are expecting largely a single-digit decline on their overall number front. Firstly, when we talk about the revenue front, almost a 10% decline we are expecting at 8,412 crores. Coming to the EBITDA number, 11.5% decline on a sequential basis at 1,571 crores is our expectation, and the margins are expected to cool off from 19.1% back in Q3 FY23, which was a record number for the company, and this time around we are expecting this number to be at 18.7%. Coming to their profit figure, 5.5% degrowth expected at 1,412 crores is the number of profit expected from the company. But like you were mentioning about the volume growth, definitely export has been the biggest drag, but other than that, domestics have been supportive. 125cc plus segment did well, three-wheelers were supported, and that's expected to impact the margin profile of the company. Coming to the exports demand, that was impacted due to availability and the devaluation of the forex, but like I mentioned, the key highlights and the key factors to watch out will be the margin front as well as the outlook on the exports, because back in Q3 the company guided that from Q1 FY24 onwards they are expecting some build up on the exports front, starting from the Latin America market going to the African markets as well. So any positive commentary on that front will be a key thing to watch out for, and other than that, the guidance on the margin front will also be what we are looking at. The stock is already trading at 52-week high levels, so all eyes on Bajaj Auto.
Right, Shrishti, we leave it at that. LVMH, the market value has hit $500 billion, and that's a first for a European listed company. I mean, talk about the luxury market booming, and that's clearly a telltale sign. And that's pretty much across the board also, right, Gurmeet? Be it real estate, it's the luxury and the premium end which is doing well. I mean, companies like Ethos, Titan, Cars, for instance, the kind of sales that you're hearing from Porsche, BMW, Mercedes-Benz, etc. It's all the high-end end of the economy that's clearly not getting affected by anything.
I think it's a combination of factors. A bit of it is a post-COVID impact that life is fragile, and the ones who can afford should live to the potential. Some of it is driven by genuine demand being strong in pockets. So real estate, for example, since you mentioned, I think the bad experience in India with developers, especially in property, which is where you do construction link programs, have been very bad. Both in Delhi NCR as well as in South and in Bombay. So people have burnt their hands. So there is a movement towards branded premium developers and the wage growth. So I was looking at some data. If you see the wage growth and the price hike in some of these affluent launches, especially which is more than the mid end, has been in line, which means the affordability has been kept under check because we only tend to sometimes look at prices and ignore the the income and the wage growth. So if you look at, for example, Delhi and DLF, for example, had great launches. I mean, they will exceed the pre-sales guidance, likely to do more than 10,000 crores. We saw Macrotech giving a guidance of 20% after doing 23% this year, almost 14,000 crores this year. Also, the balance sheet is becoming better. There's been a reasonable debt reduction as well, which again supports it. Even in auto, I think if you see the cars are doing better than two-wheelers and the tractor makers, clearly partially due to the mobility things changing post-COVID and the affordability aspect. So we continue to like this space, as I mentioned, housing earlier and auto, more passenger vehicles for now. Once rural economy shows signs of pickup, which I think it should this year, there will be a government push. There are 7 state elections. Hopefully, we should have a good winter crop. I think, and that's the time probably. Maybe you can get in early if you have time on your side, and you can are okay with some short-term, near-term volatility.
Coming in on some of these luxury, facing sectors as well. But Naresh, wanted your sense regarding a couple of these counters which have been doing well in the trading session today. Varun Beverages as well as Westlife Development. Both of them are up around 3 to 5% and on decent volumes.
There's been a very strong counter in terms of the way it corrects and again comes back towards a new high. But tends to take a slow and steady pause after making a new high, does not see a strong momentum. So it made a new high around that 1450 plus levels. So I would expect a 1550, 1600 to be a target, which should be tough one. On dips to 1300, 1350 would be a buy. So that looks interesting. Westlife is on radar. The stock has made a base around that 650 mark, but 750 is a resistance. If it can cross 750, could go well into a new all-time high. The trend is strong here as well. The last big breakout got retested. So a buy again on dips, not at current levels.
HDFC Life, clearly that's the big buzzer in trade, holding up 6% as we speak. Tata Consumer has shot up very well, about a 4.5% uptick there. There's IDFC First, Birla Soft, Oracle Finance. These are all names which are holding out pretty well in trade. Persistent has shot up 3.25%. LTTS is holding up almost 2% right now. Coforge is up 2%. Kunal, a meaningful bounce, you think, on mid-cap IT especially?
Yeah, I think it's a good bounce for the mid-cap IT stocks. Tech Mahindra, in fact, actually bottomed out closer to 1080 odd mark. Then it was Coforge, Persistent, which started to show signs of strength. TCS is also trying to make a comeback again from the large cap IT space. But I think the likes of Wipro has been disappointing. So the trends are still mixed on the larger cap front, but I think from the mid-cap space, Coforge is something which looks attractive. That stock has been performing quite well in the last 1 month or so. So as compared to most of these IT stocks which had gone into a strong rally and then corrected very sharply, the likes of Persistent, etc., Coforge has been managing to hold on to that 3,900-ish kind of levels for itself. So even after a bit of a correction last week, so I think that's a strong sign of a strength. So yeah, I think mid-cap IT seems to be performing much better as compared to the large cap IT stocks as of now.
And Persistent, of course, comes out with numbers later today. The expectation is that there will be a growth of almost 4% on the top line as far as dollar revenue is concerned. 3.5 to 4% growth is expected in rupee revenue as well. Margins, however, might remain flat because whatever benefit will come with respect to currency tailwind will get offset by the higher travel costs, etc., that the company is facing. More important will be the management commentary going forward, because this time around the profitability should be decent with a growth of around 14%. The number is expected around that 270 crore thereabouts. The new deal pipeline is expected to remain steady. 200 to 250 million is the lowest estimate on the street. There are on this people on the street which are expecting a number for $400 million as well. So we'll have to wait by and see how the stock has will actually perform. In terms of the stock performance so far, it's definitely outperformed its peers, so the valuations are a tad bit on the higher side. But for the Nifty itself, it's a massive turn that we are seeing today. 17,750 has been scaled, an up move of around 125 points. The Sensex is past that level of 60,000, and as we have been pointing out, it's the Bank Nifty which is doing its bit, and the PSU banking names like Bank of Maharashtra, which is also result reaction, PSB, UCO Bank, and even SBI for that matter, are all holding comfortably in the green. If I had to ask you, Gurmeet, to zero down your, top recommendations from the PSU banking space, apart from SBI, is there any name that comes to mind?
There are a lot of value plays, but we restrict ourselves to SBI because, you make mistakes when credit growth is 15%. In fact, when credit growth is in single digit or not doing, it's pretty easy to identify, what is doing well with what. And what we have seen is, that one accident and there could be a sudden deterioration, allowing you very little time to exit. So at best, you can be tactical since numbers have been good. So we would want to stick with SBI, and it's still at about 1.2, 1.3 adjusted book value. I have not seen this kind of asset quality metrics in SBI for a long time. If you see their restructured pool, if you see their credit cost, see the work they are doing on the digital side, especially the YONO app, I think it's at par with some of the best private banks, and there is genuine improvement in credit underwriting. I think the test happened during COVID. There were a lot of concerns on Mudra loan. I think that portfolio also seems to be doing okay for now. And if you see that I see a bit of a culture change happening, and that's evident in the subsidiaries also. You see mutual fund is number one in the asset management space. SBI Life is amongst the largest private insurers. So a lot of these subsidiaries also reflecting that. SBI cards again, again one of the better ones as far as the card companies are concerned. So I think one should stick with SBI. This is an environment where things are uncertain and the risk reward is pretty decent.
Okay, let's quickly get in some BTST ideas as well going. Considering the buoyancy in the market, Kunal, what's on your list?
Focusing on banking names, so two PSU banking stocks. First one is about Bank of Baroda for a target of 188. Stop loss could be kept at 176. And second is from the non-FNO space. It's about Union Bank. The stock heading towards a breakout of the previous highs of 73. So would suggest a buy with 79 as a target and stop loss at 70.
Right. Naresh, what about your BTST trades?
So first would be a buy on IDFC First Bank showing good momentum, a stop loss at 57 and a target price of 61. Second is a buy on BHEL, which has recovered well from the 70 mark. Couple of days of pause and now making a fresh move. Target price of 80 and a stop loss at 75.
Suresh, would you recommend a buy on some of these logistic plays, whether it's the real stocks like Rail Vikas Nigam or Aegis Logistics, which is up around 6%? You also have Gujarat Pipavav, which is up around 4.5%. Any name that you like?
So RVNL has already made a large move today, so it's up 13-14% right now. So there the risk reward doesn't fit. But Aegis Logistics is one which looks very interesting. The stock last made a top around 400 levels in 2021, went all the way down to 200 levels, has recovered back to 400. And for the last one and a half months, it was consolidating around this 400 mark. Today is a clean breakout into a new 52-week high and an all-time high. I would expect this to actually take a sharp move on the upside. A target price of 460 to 500 here is possible in the short to medium term. So Aegis Logistics would be the top pick in the sector.
That's quite a spurt actually, 5.5% in today's trading session. But let's just bring up the last 6 month and 52-week chart as well for Aegis and show you how these stocks have actually done in the last few odd months or so. Actually not bad. an over 36% move is what Aegis has seen in the last 6 months, and a 78% notch up is what it's seen in the last 52 weeks. Gurmeet, couple of these interesting plays, right, with the entire manufacturing demand theme. Some of these ancillaries are the ones which stand to benefit even more than the main players.
Always happens, right? So, when gold does well, it's in the manufacturing value chain. One space which is clearly looking good is this EMS, which is electronic manufacturing services. So far, for example, in mobile phones, we only are right now more assembly. We haven't really started making, let's say, the camera panels and the PSP boards, etc. So I think at some stage, even those two value additions will come. If Apple can source, export $6 billion in a year, I think a lot of other global brands will follow. So that's one space, we are tracking very closely, which is EMS. Auto ancillaries also, I think the sector is undergoing a big disruption. I think we probably will have a very mixed market with a combination of electric, hybrid, and maybe, ethanol mixed plays. We need to see, maybe hydrogen, who knows. So that's another space which is, and you need to closely track the companies who are creating capacities right now, doing innovation, undertaking the capex in tough times. May not right now reflect in the share price. It's a difficult decision to make. I was interacting with some of the CDMO guys. So India has a huge opportunity in novel custom synthesis. 360-degree opportunity across renewable chemicals, APIs, etc. Again, but not going through a great time right now. So you want to be a little more brave and be more forward-looking there. But there is value. There's clearly value.
So since ancillaries are expected to do better than the mainstream, how are you playing the real estate uptick that you said is likely to continue at least for the medium term?
Always been more constructive on cables and wires, with names like Polycab, etc. PVC pipe makers, some of the tile makers as well, some of the fast-moving, consumer electrical goods makers. Also, you have a good summer season ahead, so I'm also looking at some consumer durable plays as well. Housing is a huge force multiplier, so I think probably, and the balance sheets there, other than real estate, are much better in these companies.
Gurmeet, always good to have you on the show. Let you go on that note. Let's just see where we are headed in for today's close, and pretty much around the session highs, 17,769 in fact now on the Nifty futures. A solid uptick of 111 points is what we are closing the day with. Kunal, just very quickly, tomorrow may not be as strong a day for banks, right? I mean, today you are seeing ICICI Bank react to its earnings. There are others as well, which are purely on that buoyancy holding out. But in the near term, in the very near term, what levels do you see on the Nifty Bank? And does the trade still hold long?
It still holds on, and I think it could probably be a better week for the banking index, because start of the week look at it this way, that last week or the previous week, the entire market, Nifty, Bank Nifty, many of the individual stocks, they went into a lot of profit booking. Now, start of this week itself, on the first day, we're seeing the banking stocks making a strong comeback. That generally sets the tone for the entire or the rest of the week. Now, what matters is that which are the stocks which could lead the charge from the front, whether it's the event-based stocks, the likes of ICICI Bank or maybe HDFC Bank, which has already delivered results, or with the probable candidates of maybe the SBIs, etc., which could probably lead the charge from the front and carry on with the momentum. So I think that's the only question over here, which could probably be, which is something to be looked out for. But overall, the tone seems to be set for the markets or for the indices to come back and make a fresh swing high. So for Nifty, I think 17,850, which was the previous swing high for the Nifty, that should now be taken out hopefully by the end of this week. And for the Bank Nifty, we have already made a fresh swing high. So I think that momentum should continue for the index as well.
Just wanted to highlight what's happening with JSW Steel, because that's perking up as we speak. Other agencies have reported that MG Motor India is in talks with JSW Group for a 15 to 20% stake sale at a valuation of $2 billion. So not sure if the reaction is stemming from that, but definitely a build-up as far as JSW Steel is concerned.
Oh yeah, absolutely. That holding out well. And there is also news coming in from M&M saying that they have revisited the price terms for Sanyo Special Steel stake as well. The backward integration story within autos is getting pretty active. Let's begin winding up for the day, and while we're closing well above that 17,750 print, it's really been banks all the way. ICICI Bank, SBI, these have been your big hefty movers. IDFC First as well has seen quite a bit of spurt. And then others like BOB, RBL Bank, City Union Bank as well, along with Canara Bank, of course, are going home as big movers. Axis Bank as well holding out 2.25% in trade as we speak right now. IndusInd Bank, though, after its earnings, has settled in lower by over 1% on the futures at least. Bandhan AU Bank and Kotak have also been the underperformers as opposed to what the rest of the banking pack did today. But let's take stock of what else has been happening. Technology as well made a comeback. So everything from a Wipro to even TCS for that matter and TechM, they've all been winners today, as have been the mid-cap IT names like a Persistent, Birlasoft, Oracle Finance. They've all held out to be winners in today's trading session. Sun Pharma, even though it didn't react all that much on opening to the US FDA news coming in the Mohali facility, but now it's sunk to the session lows and closing in with a 1% downtick. There's also been DRL, Cipla, both those stocks along with Divi's have all been laggards today, as has been an IPCA Labs, Laurus Labs as well. Idea, the big mover from last Friday, remember it shot up about 6.6% on the futures. Today it goes home with losses of 2.5%. PI Industries and Z have also been the other laggards in trade. But good session, pretty much one way, thanks to banks, given their maximum weightage on the index as well. Oh, we forgot to check in on Reliance and how that actually fared. Even though it started off the session pretty quiet and not such big moves, about less than 0.5% is where it shut shop the day. But that's pretty much it in this edition of Closing Trades. Thanks for watching.